Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist of WealthPress. Today's Friday. It's the Friday 13th, January 13th. Woo! You know what's interesting? Friday the 13th is supposed to be a bad luck day, but I did some back testing, and actually Friday the 13th tends to outperform the stock market beyond most days. So actually Friday the 13th is not really that bad of a day for the financial markets. You know, I backtest everything. I wanted to start off today by letting you know that. Now, today is Friday, and it's a recap and an algo corner. And boy, oh boy, I've got a lot to talk to you guys about. So the market is down about 250 points. The NASDAQ is down sharp, and we've got a lot of things going on today. Matter of fact, today is the official This week was the official first start of the year as far as the market is concerned, and today's the official first day of earnings. And boy, oh boy, oh boy. Whew, look at this. Delta Airlines, United Health, JP Morgan, Bank of America, Wells Fargo, BlackRock, Citigroup, Bank of Mellon, and I think I've already mentioned Delta Airlines and First Republic Bank. So you've got some earnings today, some real earnings. The big focus is going to be, in terms of earnings, the big focus, and I'll get back into the story, is going to be on the financial sector and how it reacts. Now, I've been short the financial sector, and I believe that it wasn't going to reach the second top, and now it is, in fact, cooling off. We may see more selling pressure. Now, I want to talk about Algos. Now, this is something I've been talking about for a long time, and it's becoming more and more prevalent every day now. Now, I'll get into the analysis in a minute. Take it easy. I'll get there. But notice this is the last 1 month trading action on the S&P 500. This is all the way from December 19th. Today is January 13th, so not a month, but almost a month. Look at the trading action we've seen, right? Choppy, very choppy, which is not abnormal. But look at what happens. It breaks out, right? It goes to the upside. And literally 1 day after breaking out to the upside, it comes right back into the channel. You can see it right here. And let me show you on the QQQ how it looks. So you could see what I'm talking about. See that? It comes back here. And already today, it's at 276. It's already right back here in the channel. We're going to open up right here, right back in. And maybe go even lower if there's nothing to hold the market up, because we've got a lot of earnings. And some come out before the opening bell, and some come out after the opening bell. But it's going to be a very big day, and today's going to set a lot of tone for the rest of the market. But one of the things that I'm starting to see more and more, and this is all related to Algos, you will see Algos take out our stops and bring us back in. Kind of like what happened right here. Let me show you a daily picture of it. This has been going on, and this is why. This is one of the biggest reasons. This is like 9 out of 10 reasons why I'm not using stops anymore. Because Algos, see, they trade in a range like this. Let me just increase this range a little bit here. They increase this range right here, the range we've seen. They take us out, and then they bring us right back in. Like right now, the market's going to open up at about 42-ish or so. Watch it come right back down here. 339. 339 is right here already. And actually, I should raise this. Yeah, that's more accurate because it did go here earlier. So this is the real area that we're looking at. And on the bottom, it's right here. So I'm willing to bet you a nickel. I'm willing to bet you a nickel that the market's going to come back into this range. But here's what I wanted to show you. Remember, we were looking at the daily range on the S&P or on the Dow, and I was showing you this right here. This is the same thing that I'm talking about, except it's happening on a daily bar. See that? It looks like we're breaking out, and then we come back down. Very much like this little pivot we're seeing here. It makes investors and traders appear that we're breaking up to the upside, and then we come right back down. Folks, that's something that we've seen more and more over the last decade. Before last decade, you would see a trend and channels, and they would hold pretty well. Now with all these algos, you see the algos pushing the envelope a little bit to the upside and then taking us out. So don't be surprised if you saw this come right back into this range, kind of like you saw here. And it's a perfect example today for me to show you this because it's happening all over the place. Look how it's happening on the QQQ on a daily chart. See that? It's happening on, I showed you an hourly chart, but it's happening on a daily too. It breaks out, comes right back here, triggers a bunch of buys, just like it did right here. Look, just like it does right here, and then it cools off. Triggers a bunch of buys, and then it sells off. So back in the day, not even that long ago, about 5, 7, 8, 9 years ago, it's been happening gradually. You would see these channels, and they would literally go to the top of the channel, to the bottom of the channel. But now they go a little bit off. They trigger your stop losses or your buy orders, and then they come down. So that's one of the major fundamental changes we've seen with algos, and I wanted to show you today because it's so prevalent on a daily chart right there. Don't be surprised if we go back down. And if you look on a monthly chart, let me just make this a little prettier here. You could see it right here. See that? Comes right back in. Takes you out, makes you feel like we're going to break out to the upside, and then pulls you right back in. Folks, that's algos, and that's one of the reasons we're looking at volatility a lot more and using stops. So the market's down about 272 points, erased everything it's doing. The bond market still looks like it's going higher. Now, if the bond market goes up to using the TLT, which is down almost 1.5 basis points, but if the bond market was to come to the 110 area, it's at 106, I think we would get another oversold territory and we would be able to sell it. Let's talk a little bit about global economy and what we can expect from here. Let me just go there right now real quick. Been showing all this chart data on stocks. Want to kind of show you all the highlights that I highlighted. So stocks were closed higher yesterday after cooling inflation bolstered bets of smaller interest rate hikes. That's fine, but don't get too happy. 0.25 is still a pretty big hike. Thursday's trading session, 3 U.S. benchmark indices rose as inflation fell 0.1% for the month, and more than 2.5 years in December, low prices for gasoline and other goods. Things are coming off. Consumer prices rose 6.5% on an annual basis. In December, down from 7.1, very important. However, a separate reading showed weekly jobless claims stood at 205,000. And if the jobless claim is solid, which it is right now, the Fed is going to get extra aggressive on their rate hikes, because if people are working, they can handle the increased rates, which is why there's a 0.25 baked in at 93% right now. Remember, it was like at 60%. Now it's at 93%. Now, JP Morgan, Bank of America, Citibank, Wells Fargo, and others are reporting. Some morning, some afternoon. Also, eyes are on the U.S. Michigan consumer sentiment. They're looking at a value of 60.5 compared to 59.7, and the consumer expectation, and that's going to be slightly off. But I'll be honest with you. I'm always going to be straight with you. The focus is going to be on earnings and how the forward-looking statements from the banks give us an idea of how things stand. U.S. banking sector is in focus today. In Europe, everybody's looking at how these banks are going to perform. They're really worried about their expectations, but so far, they're looking at a positive start for the year. China, on the other hand, China continued optimism over the country's reopening and its international borders for the first time in 3 years. I'd be excited too. Data on Friday revealed that Chinese trade surplus increased to a record $877.6 billion, highest record since 1950. That's pretty impressive. As exports advanced 7% despite weakening U.S. and European demand. Very, very true. Manufacturing demand was down 40%. At the same time, the Nikkei closed sharply lower on speculation that the Bank of Japan might adjust its ultra-loose monetary policy. Pre-market moves, Tesla's down 5%. Lockheed Martin, one of my favorite stocks. I've been getting buy signals on this. I'm glad I didn't do anything. Down 3%. Earnings, I already mentioned to you, Delta Airlines, First Republic, United Health, JP Morgan, Wells Fargo, Mellon Bank, all the big bank stocks. Now, here's what you need to focus on. Volatility right now, look at it. It looks like it's bottoming out. Typically, when volatility bottoms out, and this is a long-term bottom. Let me show you this. Look, this is a one-year low on volatility. A one-year low in volatility. Typically, and I'm expecting volatility to begin rising once again. So here's what I'm going to expect. I expect volatility to rise. I'm expecting the bond market to start cooling off, although I really hope it doesn't and comes up a little bit more. I think the financial sector is going to take a little bit of a dive. I don't think it's going to come up here at all. And I think the NASDAQ is going to come back. It's already at 76, which is right here, is going to come back into its range. This is why I've been so bearish and putting on so many short positions in the last couple of weeks. In terms of sectors, before we get to sectors, there's one last thing I want to show you that's giving me a strong indication that we are going to come back down. And that's the number of stocks making 20-day breakouts. 487. And look at how many stocks are making 20-day breakouts. Typically, when this number gets to the 500, the market is overbought and needs to cool off. And it looks like it's doing that right now. In terms of 20-day breakdowns, only 33 stocks. So there's a huge preponderance of stocks trading higher than lower. Whenever this number gets into the high 400s, low 500s, we typically turn around, and I'm starting to see that happen. Also, volatility, as I said, is near its lows, and let me just show you something. We've got a huge amount of stocks that are trading above. Like real estate, 100% is trading above the 50-day moving average, but only 29 above the 200. It's laughable. Look at this. Let me show you this. I mean, it's laughable. Look at this. Look at where's real estate right now. Do you think it's going to hold right now at these levels? Of course not. So I think this market is going to cool off, and I think volatility is going to go higher. Next week, we may have to be a little more defensive and limit our long exposure and increase our short exposure. But I wanted to show you today how algos are totally like breaching these buy stops and sell stops and causing investors to think the market's going higher when in effect it's going lower. And again, the perfect example of that was the Dow Jones on a daily chart. I'll show you two examples of it. It's been happening more and more and more. Look at this. It happened right here. Let me change the template. Happened right here. Right here. Look at that. Looks like it's going to break out. Flat top, breakout, buy stops. You know how many buy stops got triggered here? And the same thing happened right here, and I think it's going to just cool off. Now, folks, before I let you go, Bank of America, Citigroup, other banks reporting earnings. The season is heating up hard. Quarterly reports have power to move stocks regardless of what the broader market is doing, making this is one of my favorite time to trade if you know what you're doing. But this year, Wall Street legend Tom Busby and I are changing up how we trade these reports. Tom discovered a special window that opens up 72 hours after certain earnings are announced. He calls it the earnings drift. The earnings drift. I love it. I just sat down with Tom for a very special presentation where he shared all the details on this incredible breakthrough, and he's going to lay it out for you. I'm there to keep him on track. But seriously, folks, Tom gets excited, and I was really excited about this. We had a great 90-minute conversation. You don't want to miss out. Follow the link below. Check it out. Watch it over the weekend. It will amaze you, but this is the only way to trade earnings in my book. Otherwise, you're gambling. Follow the link below. Post comments in the YouTube Wealth Press channel, and that's where the link is too if you can't find it under this video. Have a great weekend. Send me love letters and emails at support@marketgeeks.com. I'll talk to you guys soon. Be careful with this choppy market. Bye.